let's take a bigger look at Alibaba. So Alibaba, and I'm going to get back to that topic you brought up about fear in the markets, implied volatility, because that actually has been helping us in our Alibaba trade. So Alibaba has been downtrending since what's this date around here? Around October of 2020. So, shorting Alibaba or buying puts against Alibaba, smart thing to do. And usually when something's been downtrending more than about 6 months, I personally start looking for some swing trading on it. So it's a little bit different than what we've always been talking about premium selling. This is more of a directional strategy, a swing trading. I'm going to use a leveraged option in order to take advantage of the underlying symbol move. So let me fast forward. I want to just share with you a trade that I did and then a trade that I'm setting up to do. So pretty basic swing trading template that I use. It's a trend followed by a trigger of an overbought, oversold indicator, followed by a confirmation, some sort of lagging indicator. And so, as you can see here, I had a nice trend downtrend. I had my Williams percent R, my trigger indicator, show me that it went to an extremely overbought condition. And then I had a crossing of a close below the 7-day. That happened on some nice volume. The next day, I had follow through. Remember, folks, what I like to do is not be present at the markets during the day unless I have to. I rather check things in the evening. So in the evening is when I got that signal. The next day, I got myself the follow through. In other words, the basic rules I put in to my automated trading. I came back at the end of the next day and it said, hey, you have purchased for yourself some puts against Alibaba. And sure enough, like rocket science, that position, I wound up buying $1.90 per share price of those puts. And over the next couple of weeks, it was about 2 weeks, that price went all the way up to $4.50. When it went up to about $4.20 a share, I started to put a trailing stop in place, basic trailing stop, just a following every day, kind of locking in profits. And as you can see here, we started to go against the trailing stop. I got out at $3.80, locked that in, doubled my money. It was a real nice trade. And what you can see here is my trigger went again. My Williams percent R has gone to an extremely overbought condition. And as of last night, I got myself a signal. I had my close below the 7-day simple moving average, as you can see right here. That's my signal. The volume left me a little bit not as impressed like I had over here for my last signal. So I'm not sure how valid that signal was. Plus, on swing trades, I don't like to get in on a Friday because people will then think about what they did over the weekend and things can reverse very easily on Monday. So I'm waiting until the afternoon session, professional hour, to see if today's the right day to get in. I've got some basic rules in there. But again, because the volume picture both yesterday and today are not that impressive, I could easily be waiting till Monday to see if I want to trade this down move again with, again, some put options. But the other thing I wanted to mention, Sip, is exactly like you said, when there is fear in the markets, people start buying options. They buy the options because options are a way to hedge risk against your positions. And so people start buying options. And what you can imagine is that those options, when there's an increased demand for them, those options go up in price. So as you can imagine, not only was my option going up in price, my put option going up in price because the price of the underlying symbol was going down, my put option also was going up in price because people were buying put options in order to, hedge their fear. And so that's happening all over the place. As we see that VIX go up, as we see the individual stocks implied volatility go up, they're going to become more valuable, and that's just going to add to your bottom line.